terms of measuring time. My thought process is that we're going to have a before ETF, after ETF kind of epochs of Bitcoin, and specifically talking about the volatility. We had massive asymmetry and lots of volatility, 80% drawdowns, et cetera, leading up to this. But if we get, as you said, stability, that also is a pro and a con, right? If there's less volatility on the downside, I think people say, oh, that's great. But then should we also expect less volatility to the upside as well?
I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land. And crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right.